Thanks for hitting play and checking out this video from NetPicks. Today, this video is going to be called The Secrets of Trading Breakouts. And really, there are no secrets. It's just a pretty catchy title. Price breaks a certain level. Breakout traders, they pile into the move looking for like a fast price move to capitalize on, right? That's the end goal. Whether we're talking about support and resistance zones, swing pivots, even the extremes of individual candlesticks, when you play a breakout, they can be pretty exciting, right? Because there's nothing more gratifying to see price moving favorably in your direction without any threat to your protective stop, right? It can be exhilarating, I'll admit that. Until it isn't. The truth is that most breakout trades don't just take off and start to trend. Some will fall back into a range, some will just pull back to the breakout price, and some will just not advance at all. Right? Trading breakouts is not for those who think that trading a breakout is painless, because it's not, or if they think trading is painless. Right? Because when you think about a breakout, you're actually trading in a potentially highly volatile area. There's competing forces at play in those areas. So are there some methods that you could use to determine which breakout has the potential to be less painful? There is, right? And if you have a breakout strategy that includes some of what I'm going to cover, I think you're going to be in better shape knowing which ones to ignore. So the first thing is which direction to consider on the breakout. And counter trend trading, it's a tool, right? You can use as a trader. But trading the trend just has a better bet for breakout strategies. Now there was, and there actually still may be, an approach where you just bracket both sides of a trading range, and there's no edge in that. So think about this. If you decide to turn around on a highway and head right into traffic, it has the potential to be pretty painful. So consider only trading in the direction of the trend for your time frame. Yeah, you can use multiple time frames in trading. However, until you can master just one time frame, just forget about adding another. So this is a chart of Alibaba. Now, would buying or selling a breakout on this chart be better? Which one? Right, it's pretty obvious. We're looking for sells, right? It's the better play. And using a bar chart removes the bias that's associated with the color of the candles, okay? This is a lot more objective. What about Netflix? Higher highs and higher lows would tell me that long trades would be a good choice. Because as overall, right, this stock is making higher prices. So that's one thing. Which direction? The second one is room to run. So what's in the way? So once that breakout occurs, we want to see that there's enough room in the trade before slamming into another area of potential support or resistance. Now, sure, price can just rocket right through those areas, right? But remember, we are risk managers first. So ask yourself, is there enough room in the trade to at least be able to adjust your protective stop? Now, here's a key point here. I'm not talking about the original level that you need to break through. Okay, now this will be important later. On this chart, there are several potential breakout points, but the main roadblock to price movement is that top and the obvious swing level on the chart. Now, remember, this was potentially resistance, okay, until it actually acts as resistance. And then we can call it resistance level and setting price back down, even after that momentum push up. And you'll find that the close by price levels that will cause you issues, you'll see more of those on the lower time frames. Okay, that's why I personally use daily charts and weekly charts for all my setups. So here we do see price holding up briefly at the former resistance level. Now, true support levels. Now, they'll be the key level to look for when you're shorting. Why? Because those that are long over resistance, they place their protective stops under the main support zones, right? You can see the price action around the support level is more active than the resistance one that was acting as support. So when the market is seeking flow, right, seeking orders, it looks for stop loss orders that are in the market, and that's where they usually are. You can look for bullish or bearish clues. Now, when we're looking to play a breakout in the direction of the trend, we want to find those that offer us the best reward. So to do that, if you look for a buildup of interest, either bullish or bearish, that's a vital thing to do. So think of bargaining for an item. You would only pay higher if you truly wanted the item, right? So will others. That's how an auction house gets more for an item than it was initially offered for. So there are a few clues that I look for here. One is hugging the price zone. So If price is up against resistance and it's failing to break down, that's bullish. Okay, that this breakout, when it does happen, could move quickly in your favor. Now, this is an extreme example where we see basing under resistance and a strong gap up over the highs. Looking at this chart, I don't like breakouts that starts with the price rocketing off the lows like this, especially if it just breaks right through. Oftentimes, those that were long from the bottom, they ride the breakout and then sell their positions. That basing under resistance, that pause in price advancing, it shows there's still buyers coming in at this price and perhaps some long traders unwinding some of their positions when you see the red candles or higher upper wicks. Let's take a look at what higher lows into resistance, right? Or lower highs into support. So when people are continually buying at higher prices, this shows intent in that direction, right? It's a sign of strength. So contrary to common teachings, price pulling back into a range after a breakout is not abnormal, okay? It's not a failure. Think of those people that went long into the breakout, okay? They're in profit. They're offering up their shares in stock, for example, for new buyers to get out of their positions. Now, unless you see price ripping through halfway of that range, to me, this is just normal price movement, right? Chart patterns are not perfect, okay? You can't expect them to play out as the textbooks are promising you. Yes, the high with this red line is close to this breakout level. However, it's all part of the same price range. Okay, and I'm also using a lower time frame for this example. This is a 15-minute chart. Rejection of lows. Now, this we call everything from trap traders to pin bars, right? I just call it a failure test of the highs or the lows. It's indicative of price rejection. Okay. Here, price dips below the range of the basing at resistance, right? Buys, they can be at the close of the candle or a break of its high. The circle, that indicates price putting in a new high and dropping back. So would you have entered that? Okay, that's the daily chart, right? And it depends on how you enter these trades. Do you enter on strong closes above the level? Do you enter with buy stop orders when price breaks a certain price? Do you enter the next day if price breaks the high of the breakout candle, right? More of a continuation. Or do you enter in the base? Okay, now there's no right answer to these. Okay, I will do all of those. It depends on what the chart is looking like. Let's talk about trade entries for a second. And earlier I made a key point talking about the main support or resistant level for breakout trades, right? Entries that take place prior to the actual breakout, right? Based on what we've talked about. That will have you in a position before the actual breakout. Now, some may think that's a high risk move. Think about it this way. Basing under resistance or over support can give you enough room to manage a trade. Entering on a failure test of the lows or the highs, depends on which direction, has you entering, and there's plenty of room for you to manage your trade upon the breakout, right? The green line here is the entry. On the left, you're entering somewhere in the basing pattern. It doesn't have to be exact. On the right, you're entering after a failure test of the lows. Now, of course, these are perfect entries, but both of these entries, right, it's the idea behind it, will give you enough room to manage your trade. But you've also got a really great entry if a new trend run is underway. And you could even consider using the break of an inside bar. Okay, that's just another consolidation on a lower time frame that you will see on your trading time frame. Now, if you place your stop losses, because we got to put a protective stop loss here. If we put it just under the breakout price level for longs, you're just ignoring the rhythm of the market, right? Remember, price coming back in does not just invalidate the trade. So depending on the range you are trading, you could put your stop loss under the entire range. You can consider halfway inside the range. You can consider ATR from entry, right? Average true range from entry. Or under any obvious price rejection like those failure tests. Again, there's no perfect answer, okay? But giving your trade room to breathe and to accept the normal gyrations of the market, it's always the best play. Profit targets? Well, it really depends on what you want from the trade. You know, what do you want from your trading? There's good arguments for different exit points, right? Using a trailing stop multiples of your risk for your exits, like 1 times your risk, 2 times your risk, scaling out of your positions. Now, sure, trailing stops can be great for catching a trend, but they can also take you out before a big run in price. Multiples of your initial risk, it's objective, and it's a consistent way to take your profits, but you're going to miss the big moves. That may or may not happen. And scaling out as your trade goes in your direction, it reduces your risks, but it can also give you a full position loss if the trade goes against you right from the start. Partial position gains on the big runners when they do happen. So anyone that tells you there's a best way of doing anything, they're incorrect. Okay. It's not just a line when you hear traders tell you, you have to know yourself as a trader. You're never going to be a perfect breakout trader. Okay. You're going to have some losses. You're not always going to catch the big moves. But you can mitigate the downfalls of breakout trading by following what we just talked about, the secrets, quote unquote. Look for a breakout in the direction of the overall trend on your time frame. Make sure there's no potential resistance or support levels near your entry that may not allow you enough room for trade management. And you can look for the bearish clues if you're looking short and bullish clues for longs. Above all, your protective stop loss order must be set to protect your downside and honor that stop loss without question. Hit like, hit subscribe. Any comments or questions, put them below. Talk to you soon.